When you're splitting a check or paying back a friend, checkbooks, what are checkbooks? Now it's PayPal, Zelle, or Venmo, of course. The businesses are booming. We looked into the numbers here. Venmo had just 3 million users in 2015. It was 52 million in 2020 and keeps going up. It's so popular, the app's name just became a verb over the years. Venmo me. It's like Google, okay? It has entered the zeitgeist for millions of users. A surprise could be coming in tax season. Before you hit send, listen up. Newsy national correspondent Jason Bellini joins us tonight from San Francisco. Jason, you did some digging on new IRS rules?
I did indeed, Chance, and Venmoing may also now come to include IRSing. This document right here is a 1099-K, and for people who are using third-party platforms like Venmo and Zelle, well, this is going to be in their future. Check it out.
The new IRS rules are fairly straightforward. As of January 1st, payment platforms like Venmo, PayPal, and Zelle must report to the IRS the transactions of anyone who receives $600 or more per year in commercial earnings. Until this year, the threshold was $20,000. This gives the IRS eyes on many Americans who aren't currently reporting income they've received.
We get a lot more information on individuals that really are in the gig economy, you know, that people that maybe have left the traditional workforce over the last couple of years and are doing, you know, more things on the side.
Don Fort, the former chief of IRS criminal investigation, says this is a big win for tax enforcement.
It's amazing what happens to people when they know that the government is going to get a copy of the amount of money that they made. So I would expect, and I'm sure the IRS and the government expects, for compliance to go up in this area because of this, the change in reporting threshold.
Oh, indeed they do.
The bill is passed.
Congress passed the new reporting provision last year as a way to help pay for the $1.9 trillion American Rescue Act.
One second, let me just look that up.
Steve Rosenthal of the Urban Brookings Tax Policy Center looked up for us in the bill how much more tax money the IRS now expects to receive.
Congress scored that as raising $8 billion of additional tax receipts over the next 10 years. And those additional tax receipts are attributable to voluntary compliance.
In other words, individuals voluntarily reporting, going forward, income that they weren't before. It comes at a time when apps like Venmo are booming in popularity. 3 years ago, during a single quarter, it handled less than $7 billion in payments. Last year, during the second quarter, it surpassed $58 billion.
Now, we pony up.
Here's the thing. Of that amount, we don't know how much was so-called peer-to-peer transactions.
To Zelle.
Like splitting the cost of a pizza or a gift from a parent that wouldn't be taxable or reported to the IRS. Venmo advises users should select goods and services for purchases they make.
Now, you might say, hey, a simple solution for someone who wants to cheat on taxes is just to switch the business accounts to the personal accounts, but that's against the law.
Chance, now I know we've thrown a lot of stats at you, but I've got one more that I think you'll find interesting. 1 in 3 millennials, according to a recent survey, say they use Venmo for buying drugs. Now, what will the impact be of the government having more of an eye on apps like Venmo? And will that put an end to this? It's hard to say, but it's clearly a warning signal to people out there with what they're doing on Venmo is now being watched.
Compliance with cannabis dealers? I don't know. Let's see. People might use Venmo, though, Jason, for paying a friend for booking flights, which are expensive, or pay your part of the rent. That doesn't mean the recipient is profiting in some way. With the IRS maybe bulking up enforcement, do we know how that info is going to be used?
Really good question. And the IRS, I reached out to them, and they would not comment at this time on that. And it does sound like some of the regulations are being worked out. But by having this new information, and you know what, they won't be getting information for that type of a transaction if it's just sort of passing money back and forth between friends and family. It's when there's a business and there's profit involved, even if it's a small amount of profit. If I start selling pottery and accept Venmo payment and I do it the way you're supposed to do it, which is as a business transaction, then I will be liable. Well, you're always liable, but now the IRS will know that you conducted that business, Chance.
Jason Bellini making sure little business owners aren't saying Venmo, my God, come tax time. Thank you.